Hello traders, my name is Tomasz and I'm Head of Research and Education at Auxiliary. Please confirm on the chat that you can hear me and everything is okay with audio and we will be able to start. Please write on the chat. Clear, beautiful, okay. So hello again, my friends. Today I will tell you about the best trading setups that in my opinion can be found on the charts. Before we'll start, please say if most of you are first time here or you already attended some of our webinars or not. Okay, some of you first time. Oh, we met on the Dubai Expo, excellent. Thank you for coming. But as you can see, most of you are first time here. Don't worry, guys. I will try to make everything as simple as possible. Also, do we have traders here? Do you trade already, or it's first time that you ever see the market, or you already have like a real account or a demo account? Okay, so we have new traders. We have traders who are trading. No worries, I'll try to cover everything as clear as possible. Let me share my screen first. Can you see my screen? Can you see my screen? You should see my browser. Yes. So today we met on a sniper trading method. It is not the scalping method. It is not an automatic system. Sniper trading is just my approach to trading because I base it on rare entries like snipers. So we're not doing here Rambo style trading, so shooting everywhere and wasting a lot of bullets, so opening a lot of trades with questionable outcome. I prefer sniper trading, so I shoot when I'm almost certain that I will kill. That's what the sniper job is about. So you fire bullet when you are almost certain that you will hit the target, and that's what I do. That's why it's sniper trading, where you try to limit the number of entries but increase the quality. So sniper trading is all about the quality, not quantity. You have various trading methods which open random positions and try to benefit on other factors, but sniper trading is opening the position which looks awesome, which looks the best, where almost all odds are in your favor, and you can really open 1, 2, 3 positions a month. That's it, because with sniper trading you can count on really nice profits. My friends, this webinar will be based on my platform, so you will not see the presentation. I will draw everything real time, based also on your answers, questions, etc. But before we'll start, for those who are here for the first time, because some of you know me already, follow on YouTube or Twitter, or visited the previous webinars, but for those who don't know me yet, I need to introduce myself, right? Because you would like to get knowledge from the person who knows how to trade, who's a professional trader himself. Definitely not from the guy who just read 5 books and is a demo trader and is trying to show you how good trader he is, but in reality he's not trading on a real account. So this is not the case here. This is you are in Axiori webinar, and Axiori is employing only top professionals, and that's why we are here together. So, long story short, my friends, always when you see a forex educator, ask this guy for a statement, because you need to see the statement of this person to estimate if he's good or bad. And you can see my statement here. It was created just before I created it just before the webinar. So it's the latest statement. As you can see, my account is on all-time highs. That's also a very important thing. First lesson for you today. Probably you know what is going on the markets now. What is going on the markets? What is going on the stock exchanges all over the world? What is going on currencies? Safe havens. Tell me. Stock crashes. Yes. Panic all over the market. Panic selling. Traders on the stock market are panically selling stocks. Safe havens are going up. Oil crashes. Perfect. So oil was going down 30%. This year is not very good for us, guys. First, we started with the massive fires in Australia, then a threat of the Third World War between United States and Iran, then coronavirus, and now coronavirus is still a huge thing, but we got this oil wars between Saudi Arabia, Russia, OPEC, other OPEC countries, United States also, because they are the biggest oil producer in the world. United States. So we do have a few negative factors affecting markets. Markets suddenly said it's enough. We are selling everything. Markets went down, collapsed. Liquidity evaporated. So traders are just escaping from the market. They are moving to the cash. They don't want to have any assets. Well, they are moving assets, their money to safe havens, right? It's gold, it's safe haven currencies like yen or Swiss franc, but they are also moving to bonds, to the government bonds. But a lot of them are just removing money from the system. They are cashing in, so taking cash. That's why the liquidity is much lower on the market. And when liquidity is lower, so there's not a lot of money floating on the market, also those movements tend to be very volatile and crazy. But what I want to tell you is that despite this market craziness, despite this market panic, look at this account. No major changes. Actually, all-time highs. Why is it happening like this? I told you about this on many of the few recent webinars. Because when you're a trader, especially on the Forex market, not on the stock exchange, but on the Forex market, when you're a trader on the Forex market, there are no recessions. On the Forex market, you have just occasions. So on the Forex market, you have currency pairs. You have one currency and second currency, like for example, euro dollar. If you buy, it means that you buy euro and sell dollar. If you sell, it means that you buy dollar and sell euro. Okay, this is pretty simple. So as you can see, on the Forex market, you can trade both ways. You can as easily buy as sell. And when the price is going down like crazy, this is an occasion for you. This is not a recession. This is not a panic for you. This is a market occasion. So you can trade it. You can make profits on it. As you can see here, for example, My last trade was American dollar to Canadian dollar. That was a long position here. I opened it on the 3rd of March and closed it actually today before the webinar. It was closed automatically because I pulled my stop profit order higher and the price reversed, triggering it. So as you can see, this American dollar to Canadian dollar made profit because oil went down. And when oil goes down, the commodity currencies tend to lose as well. So American dollar went higher, Canadian dollar went lower, and this created this upswing. But what I wanted to show you the most here is a short position on S&P. This is S&P 500, so this index of 500 biggest American companies. Stock market traders are crying, panicking. It's the worst time for them for the past 10 years. But you as Forex traders, you have access to auxiliary platform. And on auxiliary platform, you can take S&P 500 and sell it. Sell it as easily as you could buy it. So as you can see, this selling on 6th of March and closing it, actually, this position lasted 5 hours. In 5 hours, 1,700 euros. Maybe for you it's not enough. Maybe you have much more money. For me, I think 1,700 euros in 5 hours, this is quite a decent, let's say, salary. Because when you are a professional trader, those profits that you make on the markets are your salary. I think that would be nice to have 1,700 euros every 5 hours, right? So this I wanted to show you that you can be relaxed. As most of the people are worried, Forex traders should be relaxed because the current market situation, current market surroundings are great for traders. Okay, because you have a lot of occasions on the market. So this is this account. What I would like to show you here is since September, because I started this account in September, I made 70 trades. That's not a lot. That's just 70 trades, right? Actually, why am I saying this? It's because you need to know who is teaching, who is giving you knowledge. It's not about that I want to say that I'm the best trader in the world, because obviously I'm not. But to show you who is teaching, but also based on this, on real transactions, on the real market, I will base this webinar on it, because I will show you those setups that I used in reality, not that I read in a book, but setups that were used in reality. And what I wanted to show is 70 trades for those 6 months. So you can see that you don't have to trade every single day, open positions. No, some of the traders, they open 70 trades in 1 week or in 1 month. I open 70 trades in 6 months only. And also what I wanted to show is total profit trades is just 52%. And loss trades, it's 47. This is very important because despite the fact that this is sniper trading, so you try to be sure that every position is a winner. You wait 1 week for opening position just to make sure that this position will be a winner. Even despite this, I'm having a lot of losses. Almost every other trade is a loss. This is another lesson that I wanted to show you, is that you don't have to focus on efficiency. You cannot focus. You cannot get fixated about this, that you will be right every time, because you cannot be right every time. That's the problem with retail traders, also with traders who just start trading. is that you think that you will not make mistakes, or if you will make a mistake, you think that it's a huge thing and it shouldn't happen. No, guys, this is absolutely normal. This is natural that we are making mistakes. You will make mistakes in your life, you will make mistakes in trading. The thing is that when you make a mistake in trading, you should receive small penalty, and you are the person responsible for your penalty. So the penalty you take by opening a wrong position is a loss, and you are in the charge of how big the loss will be. So if you trade with too big position, or open just stupid trade just to check the market, you are responsible for this loss. If you will allow this loss to get bigger and bigger and bigger, you are responsible for this, because you had all the rights and possibilities and abilities to close this position on a small loss. All right? So the thing is, one of the most important things in trading is that when you have a loss, you need to close this position with a small loss and then move further. And on the other hand, if you have a profit, you try to be awarded with the biggest amount of money possible, right? So you try to squeeze this position like a lemon, especially that you will trade with the trend, because I am trading with the trend. Okay, I'm gonna answer your questions soon. So when you are right, the award, the prize for you being right should be as big as possible, especially that you will trade with the trend. As for my browser favorite bar, I'm not using really those fundamentals news. I have them because I publish my analysis on the biggest forex portals in the world, so that's why I have access to them. I don't really use them a lot. I read Zero Hedge. I think it's a nice source of information. Zero Hedge. I read investing from time to time. These are banks, etc. So not really a lot of fundamental news. Okay, my friends. Also, another thing that I want to show you is that those setups that we will see today, they work on every instrument. As you can see, Forex, indexes, oil also. Look at this. I had a short position on oil in January, 2,500. If I would keep it till now, whoa, that would be an awesome profit. The same goes with S&P 500 or a most recent Australian dollar to Swiss franc. Also, one of the biggest profits. I had a short position which I closed at the end of February, and you will be able to see where the market moved. Yes, again, what I want to tell you is that those setups, they work on every instrument, on every liquid instrument. So it's not that I have a strategy for you, I have an approach which works only on euro dollar. No, I have an approach which works on Forex, on commodities, on indexes, on stock exchanges as well. Long story short, my friend, let's move to the charts. This is the same account. This is my platform. Thank you for your kind words. I saw your analysis on investing.com. It was really helpful in my trade on last Friday. Thank you very much for this. I do my best to help you guys. And everything is for free, as you know. It's just a matter of you following us, following Axiori, following our Twitter, YouTube, etc. And you will get all this information which is helpful in trading for free. So what I wanted to show you is, for example, this S&P 500. You saw those trades that I made here. Okay, yes, S&P 500. So it was opened here, and I closed it here. You can see it on the chart here. And from the time perspective, it was open here and closed here. From the time perspective, you can see that I closed it prematurely. If I would keep it, the price would collapse. The profit would be much bigger. But it's the lesson that you get over time. Also, I want to show you this Australian dollar to Swiss franc. Here also you have this position on the chart. Open short position here, and I closed it here. I thought this is a really nice timing of me because look, the price was going up. I opened it almost on local tops. The price collapsed nicely. I closed my position here. Then we had the correction. I thought, woo, nice timing. But then look what happened. The price dropped like a rock. And instead of earning, how much was it? 2,700, it would be, I don't know, 5,000 here or 6,000. Obviously, I'm joking a little bit because you never can think like this, that what would happen if I did this or if I did this, okay? Because trading is not a place to do this. Trading is just about pure facts and actions that you took, not actions that you thought about. All right, so I opened this here and closed it here. That's period. Lesson learned. You cannot think like, oh, if I would keep it, I would make much more money. No, it's not the way to do. We are serious traders. We want to be professionals. We don't want to play games for kids like this. All right. I want to know the best brokers. Obviously, I will tell you that the best broker is Axiori. What else can I tell you, my friend? You came on the webinar with one Forex broker. So I will always say that Axiori is the best. And I will prove it to you just by showing you professionalism on this webinar. Anyway, let's come back to this charts and situations on the market. Long story short, my friends, I explained to you, I showed you my charts, I showed you my results, and now I will tell you how do I trade. Okay, so pay attention, my friends. Pay attention, my friends. When you open the chart, you see the chart? Everybody sees the chart? Yes. When you open a chart and the price is here at the end, the chances for the price to go up and to go down are what? 50-50. 50% chance for the price to go up, 50% for the chance for the price to go down. So in order to have an advantage over the market, in order to estimate the direction, you need several factors which you use to estimate the chances for the price to go up or down. Is it clear now? Is it clear for now? Because it's not the end. Yes, clear. So in my trading, I have 4 factors. 1, 2, 3, and 4. 4 checkpoints that I use for trading. And in order to open a position, all those 4 checkpoints have to be checked. If only 3 are checked and 1 is not, then I don't trade. That's why it's sniper. Because sniper fires the bullet only when he knows that he will kill. So for example, if the wind is wrong, if the wind is blowing too much and he's unable to take a clear shot, so this is wind is blowing, he will not fire, he will not shoot. The same goes with you guys. This is checked, this is checked, this is checked, and this is not. You will not open a position. Simple as this. Why? Because this gives you 10% advantage, this 10, and this 10, and this 10. And it's always better to have 40% than 30%. Why? Because you are doing everything to maximize chances for a success. Everything is clear. Everything is clear. What are those 4 checkpoints? Maybe you can guess. Those who follow me on the social media maybe can guess what checkpoints I take into the consideration. Trend. Thank you very much, my friends. Thank you very much. So first checkpoint is the trend. 1. Second one, support resistances. Beautiful. Third one, trend formations. Technical formations, I'm sorry. And 4, candle signal. Beautiful. Thank you very much, my friends. I'm proud of you that you guessed correctly. So candle. When all those factors are in line, are in place, the chances for the price to go in your direction increases. Increases enough for you to open this position without a hesitation. Keeping in mind that the price can reverse and the price can hit your stop loss. Why? Because that's what price is doing. Sometimes the price will reverse, will act without a reason or without a clear sense. Let's focus on the first one, trend. Please, who can explain this trend? What are we talking about here? Why are we taking trend into the consideration, my friends? Okay, my friends. Trend is your friend, exactly. Please, please, please keep that in mind, that price is always going in trends, in uptrend, downtrend, or sideways trend. And you always have bigger chances that the price will continue moving in the trend, because trend reverses only once. So it is always more possible, always more probable that the trend will be continued, period. That's why when you see something like this, you buy. When you see something like this, you sell. Simple as this. Okay? So first, estimation of the trend. If you see something like this, you wait, because this is a sideways trend. This is an uptrend, and this is a downtrend. So trend is clear. You always go with the trend. Let's move on. Another thing is, let's say, support and resistance. Please, who can answer on the On the chat, what are supports and what are resistances? Please, my friends. I'm waiting for your help here. Thank you very much, guys. I can see that you are very knowledgeable traders here. So you are not beginners for sure. I really like your answers. You have many definitions of supports and resistances. I think you mentioned a lot of them, and all of them are good. So these are the places where the price reverses, but also it's easy to break the support or the resistance, right? But so it does not mean that the price will always reverse. Sometimes there will be an easy breakout and the price will move. But these are important places based on the historical movements or, for example, psychological reasons, where the price have higher chances of a reversal. And these are the places where serious traders, professionals, where they make decisions. Okay. And those support resistances can be horizontal or can be dynamic. Demand and supply zones. Yes, it's usually places where in history there was a major change of the sentiment. So, for example, here we have a chart. Maybe let's create other color. You have a chart and there is a resistance here. The price goes to this resistance. And everybody sees this resistance, right? Because the price couldn't move further. The price is doing this and then breaks this resistance. Sometimes it happens. What is very important for you guys to remember is that broken supports become resistances and broken resistances become supports. It's just like this. So very often after the breakout of this support, the price of this resistance, the price will come back, test it as a support, and then go higher. Very often like something like this happen. Or in case of the head and shoulder pattern, like this, there is the breakout of the neckline. So this is the neckline. And very often after the breakout of the neckline, the price goes down and then comes back again to test the neckline and then is doing something like this. All right. So support and resistances are important places that serious traders trade. What is the reason? What is the reason for this is, let me explain you on this chart. There is a resistance and then there is a support. There is a price in a sideways trend. The price breaks the resistance. Then goes higher. Then comes back and then goes higher. Let me show you this. The best places to open a position, where are they? Here and here. Close to the support. The worst places to open a position are here and here. Why? Why the worst places to do this are here and the best places are here? Any ideas, my friends? Because of the position size, because of the stop loss. Because, my friends, when you will open a long position here or here, your stop loss order still will have to be below the support. This is the place for your stop loss order. This is the place for a stop loss order, because if you buy here, the price will still be in a positive situation, even if it will reverse, because price will still be above the support and then can go higher. As long as we are above the support, the sentiment is positive. All right? So stop loss should be below the support, because breakout of the support will mean that there is no longer a bullish sentiment here, that there is a bearish sentiment. And also, you know already that supports are like to being tested and resistance are like to being tested. So you don't want to open a position here on the high levels, because the price can always go and test the support. So if the price can do this, you will be able to open. Let me remove it. When the price go like this, and you missed this initial movement and you feel sorry for it, like, oh boy, I really would like to open a position. You can open a position, obviously, which is not recommended. But your stop loss still will have to be here. So the distance will be, let's say, 100 pips. Okay, this is your stop loss for this position. If you allow yourself to lose only 2% per capital on one trade, then your position your stop loss, your position has to be small, because you will have a big stop loss. But imagine a smart trader who is not opening here. He's waiting for the pullback. Then there is bounce from the support. And this smart trader is opening here. And this smart trader also needs a stop loss below the support. But his stop loss is 50 pips. Let's say that the first trader opened one lot. It means that the second trader, to keep the same risk, so 2% of his capital, can open two lots, just because he has a smaller stop loss. But they are risking the same amount of money, let's say $1,000. $1,000. They are both risking $1,000. But the second one has stop loss closer to the price, has a lower stop loss, because he waited for a proper position to open, for the proper place to open a position. That's why if he has two lots and the potential loss is the same, because it's $1,000, but he has two lots, so the price when will go here, he will have already $1,000, and this guy will be on zero. This guy has 1,000, and every single pip that the price is going up, this guy earns more money because he has two lots. This guy has only one lot. This guy with every pips earn more money. That's why smart people, smart big banks, big players, etc., they trade as close as possible to supports and resistances, because these are the places where magic happens, and these are the places where you can open relatively big position, but still being in line with your money management. Okay, this guy, the first trader, in order to be on risk to reward ratio 1, needs the price to climb 100 pips. This guy only 50 pips. That's why you want to open positions as close as possible to supports and resistance. Is that clear? Yes, thank you very much. But there is always a but. There is this resistance. How do you know that the price will bounce from this resistance? So for example, price is here and you think like, oh, this is a great occasion to sell. How you will know that this is a great occasion to sell? Just because the price is there, it's not enough. It's not enough for you to open a position. You need a reaction on this resistance. You need the price showing you that the price is bouncing from this level. All right? So you don't take this for granted because the price can reach the support and then break it easily. So you need a confirmation, you need the price action. This is the whole concept of the price action. You look at the price, you see what the price is doing, and the price itself is giving you directions. Like, I want to do this, I want to do this. And you as a price action trader, you just listen. You just listen to the price. Okay, but how can I get this confirmation? How can I get this confirmation? And here comes our third checkbox, candles. So candles, my friend, because candles show you market reactions, show you the prices, show you what the price is doing and is willing to do. Let's see. There are bullish candles and bearish candles. Bull and bear. Please, my experienced traders, what are the bullish candles? First, bullish candles. Type your messages, my friends. What are the bullish candlestick formations? Hammer. Thank you very much, my friend, for the hammer. What else? Engulfing. Bullish engulfing. Engulf. Harami. Yes. Although I'm not a fan of Harami, but yes. Morning Star. This is from me, Morning Star. Morning Star. Don't mess it with a shooting star, which is a bearish candlestick. Shooting star. Marubozu. Bullish Marubozu. This is bullish Marubozu. On the other hand, there is a bearish Marubozu here. Dragonfly Doji. Yes, this is Dragonfly Doji, which is almost a hammer. Three white soldiers as well. Thank you very much. Okay, not to get confused, I will show you just the idea based on those. Actually, two formations. So hammer and shooting star and engulfing, bullish and bearish engulfing. And Marubozu as well. Yes, piercing pattern as well. Piercing pattern is almost an engulfing, right? So, my friends, how it looks like. Let's use purple color. So the price goes to the resistance, bounces from the resistance, goes to the resistance again, and goes here. And then what? Then you don't open a position. Then you wait. What can you wait for? You can wait, for example, for the shooting star. Right? This is shooting star, candlestick pattern. Yes. When there is a shooting star on the resistance, It shows you what? It shows you that, so this is this resistance. It shows you that the price broke this resistance and got rejected and is back below the resistance. So buyers made an attempt, made an attack on this resistance and got rejected. The sellers counter-attacked. So after this, you have bigger chances for the price to go down. So this shooting star on the resistance gave you additional confirmation for opening the short position. On the other hand, my friends, on the other hand, what can happen is the price is going there, and then creates a Marubozu. Marubozu is a directional candle, which from the very beginning to the very end is showing an advantage of one side. So for example, here buyers, it means that from the very beginning till the very end, the price was going higher. So you know that there is a resistance here, and then there is Marubozu. What it shows you is that there is a breakout. So this is no longer a resistance, this is a support. And we do have a bullish sentiment here. But knowing from the previous, knowing from the thing that you learned 5 minutes ago, you don't open a position here. You check for the price to test it. And what? And you open a position here straight away or no? Waiting for your answers, my friends. Waiting for your answers on the chat. Of course you wait. Thank you very much. You wait. What are you waiting for? For this, for bullish candlestick patterns. Because only the fact that the price went higher does not mean that we'll have a bullish sentiment. We need a confirmation. And the confirmation will be if the price will create a hammer here, for example. Because the hammer on this support would mean that the price went higher, okay, then went here, tested the support, got rejected. The buyers found this area very attractive, and most probably the price will continue to go up. And these hammers are awesome because they give you clear information about the support and the placing of a stop loss order. In case of a hammer, you open long position here, stop loss here. And then you did everything what you could, what was in your power to give yourself a possibility to make profits. Obviously, the price can do this, but price can do everything, and you have no influence on this. You can be proud of yourself because you found an interesting setup. You did everything what you could to open a good position, and now you're in favor of the market. But you have a stop loss order. If the price will reverse, fair enough. If the price will collapse, you have your stop loss order, you are protected. Okay? So these are candles. And use candles on important support resistances, because on support and resistances, magic happens. Magic happens. Now, fourth factor are technical formations. We are running out of time. I'll try to be as quick as possible. You have bullish formations and you have bearish formations. Please tell me, bullish, bearish, or both, or both. You have both. As for both, you have triangles, triangle, but symmetric triangle, because bearish is a descending triangle. Or I will do like this. It will be easier. Triangles. Obviously, it has to be the other way. Bearish triangle are descending triangles. Here and here. On the other hand, bullish formations are ascending triangles, for example. Then for bullish pattern, what do we have? We have inverse head and shoulder pattern. Okay. You have for bearish, as you pointed out, you have double top, for example. But also you have this head and shoulder pattern. Okay. Wedge and flag. Wedge and flag. These are bearish.